Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market before we get into the rundown. A little bit of news in the trading world. Charles Schwab came out and said that they are going to have commission-free trading. That's major news. They took a hit because obviously their revenue is going to go down. But TD Ameritrade and names that didn't release this news that are their competitors saw a huge drop. So TD Ameritrade was down about 25% today, closed near the low of the day. After hours, they released their own news. Hey, we're doing it too. Commission-free trading starting October 3rd. So it's a race to the bottom at this point, and this was absolutely anticipated, but it's happening faster than I anticipated. We've been watching over the last decade that I've been trading, fees go from $10, $7, $5, and to just go from pretty much, I think the standard is right now $4.95 to $0, big step forward. Like I said, it was inevitable, but nice to see it happening now. So the question is, who's going to follow and who's going to get left in the dust? I've been using Fidelity for 9 years. I've been very happy. I have had no desire to switch, but you better believe if I'm paying 4 to 5 figures annually in fees, and I don't have to, I don't care how much I like their platform, I could probably get used to TD Ameritrade's Thinkorswim platform just as easily. So I will be calling the VIP Trader deck tomorrow, and if they aren't going to give me free trades, I'm leaving, and I'm going to TOS. So we'll see how it goes, but major things going on in the world of trading. A little bit of upside after hours on news that they are going to follow suit, but because pretty much you have to. I mean, the exodus, and I just talked to Fidelity where they said, no, we don't really have any changes, but I think they're going to change that when they see over the next week how many people are going to be leaving their website and going directly to their competitors, and I am one of them. So looking at SPY, big bearish day today, and it was really in response to fundamental data, the manufacturing numbers, and you can see we really turned on a dime when that news came out. Strong start to the day, and then just a complete drop. So how do I gauge whether that drop is going to get bought? As many dips do, we see an initial drop in 15 minutes and then a bit of a V-shaped recovery. The first thing I look for is hourly support. The first thing I want to know is, are we still in an hourly uptrend after a solid downside move in the market? And as soon as we broke this support from the afternoon of yesterday of 296.60, that told me, okay, the bears are for real on this drop and they can keep control for the entirety of the day. And it happened in the first 10 minutes of the reaction, really the first 7 minutes or so of the reaction to that data that came out at 10 a.m. Eastern. We knew that this bear move was for real, and every single bounce attempt from there was just a 5-minute lower high and lower low. We did end up getting a little bit more of a bounce to follow through. But again, it's the kind of thing where we know that when we drop that hard, we're just looking for an hourly lower high. So we watch the 5-minute trend. As long as we're in a 5-minute downtrend, the bears keep complete control. When we lose the 5-minute downtrend, we zoom out and just anticipate that an hourly lower high is going to form. The hourly lower high on SPY at the end of the day was a bear flag. And then after hours, we dropped to a lower low. Here at the end of the day, we're up very slightly in after hours from where we closed. But the bottom line is the bears have a lot of momentum. We have a new resistance level. Depending on where we open tomorrow, it'll be the high of this afternoon bounce. So 294.18 is resistance. If we start tomorrow under that level of 294.18 and we break 293, the low of today, then the hourly downtrend will continue and our new benchmark will be 294.18, and anything under that keeps the hourly downtrend intact. So the bears are in complete control of the short term, and this definitely shifts the perspective now. Over the past couple weeks, we were looking to say, okay, are we going to form a cup and handle here on the weekly? Is this just going to be a little bull flag into a new all-time high continuation? And the answer now for me is no. So that scenario goes out the window as now the least likely scenario. The most likely scenario for me remains a weekly higher low compared to 281.72, but we're still going to be opening the door for the possibility that SPY bears could potentially take this price down and just break the August lows. I don't think that's the most likely scenario, but you better believe that I'm going to keep watching every single day, because when a day like today happens, the odds that that is possible goes up a lot more. I highlighted the financial sector key support that has broken, and now we're going to be watching a couple other short-term support levels to see just how ugly it can get. When you close at the low of the day, that definitely tells you that we can see further downside into tomorrow, and we're seeing the red days the past week or so with a little bit higher than average volume. And now we're looking down at the next support level. There's a little support at 292.31. There's a gap at 291.58. And we're at a point now where the weekly range here from the low of August to the high just below the all-time high is we're pretty much one more dollar drop and we'll be at the midway point. So pretty much mid 292s is smack dab in the middle of this range. So if we were to hold low 290s, then bulls are just fine with a weekly high or low. If we drop under 290, then the possibility of losing the weekly uptrend is definitely in play. So things are going to get very interesting over the next week or so. And our new resistance on the daily is where we topped out today at 298.46. It was the highest price that we've seen in the last 5 days. The bulls were right on their way to starting to shift that momentum, but obviously that news was a big punch in the mouth for the bulls. IWM, short-term bounce, got some nice follow-through, as did XBI, but that news hit and we dropped down very hard. We filled one of these gaps. We're now looking at 146 and 144.25, and we'll be approaching, if we were to drop to 144.25, which is our weekly support, if we were to drop down to that level straight from this point, we would be in daily oversold conditions as we test that support. But if IWM breaks that weekly support, it will certainly be notable, and it will increase the odds that QQQ and other sectors can break their lows as well. The most important short-term support on QQQ is going to be 185.75. If we do not break 185.75 in the next couple of days, that's a sigh of relief for the bulls in the short term, because if SPY is going to get ugly over the next couple of days, QQQ would have to break that level and enter an area with a lack of support where SPY currently finds itself. So XLF had the clear break. This was the line in the sand where this level needed to hold. If it breaks, the probability needle goes a little bit higher for SPY breaking the August lows, and you can't have a more convincing day than that, with a huge red Marabozu blowing right through that support level. And now we're looking down at 27.27 and then a gap at 26.95 as the next couple of levels. And the weekly chart, again, we're looking for a higher low compared to 25.92, which is our double bottom. We are currently, let's see, the midway point on this chart would be roughly, about 27.50 or so. A little bit less than that. So we're getting our way to the middle of that range. So short-term bears have complete control of SPY and XLF. They don't have complete control of QQQ unless we break that level, which is why the bears want to see that break. So we have all of our major markets, or I should say major sectors, in free fall as far as daily support levels go. XLV is a bear flag on the daily time frame. That bounced yesterday, zero follow through, and we're right back down to the low. And again, another scenario was if XLV breaks 88.19 and changes its weekly trend, again, the probability needle of SPY breaking its August lows will go up significantly. So obviously a lot has changed in one trading day in reaction to this data. XBI, I actually traded LABU 3 times today. So I traded XBI bullish 3 times and went 3 for 3. And that's because we started the morning really strong. This is exactly what we were looking for and what I was talking about in the video yesterday, as far as an hourly higher low and then breaking 77.13 to change the hourly trend. The downside for the bulls is they did it right into that bear reaction on SPY, but I made an initial entry when the new high of the day broke on XBI. I entered LABU there, scaled out a little bit early, didn't expect that kind of a didn't expect that kind of a 15-minute bull move, but then reloaded, looking for a higher low compared to the low of the day, locked in a very short small gain there, and then another one, I bottom fished the low of the day here, put my stop under 76.04 or under whatever that level was, lining up for LABU, entered it again, and then sold again, just scaling out short-term profit. After that, SPY was definitely weak enough that I was done trying to trade the biotech sector bullish, as the bears were clearly taking over for the day, in the market as a whole, and that was enough of a day maker to just stop trading at that point for me. The VIX is still holding its little stair-step higher lows, so we have a higher low at 1430, higher low 1520, and now another one at 1580. So we're looking up at the recent high of 1870 and then 2120, and it's going to get really interesting around this 2160 level to see if the bulls are able to break. And if we are, that's going to mean the S&P 500 is closing in on its August lows, in my opinion. So it'll be interesting to see if we can get any clues from the VIX here regarding the range from the end of August. Gold, bullish reaction to the market weakness and the bearish data, and we saw a 4-hour oversold bounce get underway, and bull miners ripped today on that news as well. We don't have a 4-hour trend change. This move came straight off of the low, so we'll have to consolidate for a higher low and see continuation into tomorrow, keeping in mind that we are just looking for a daily lower high compared to 1535. So nowhere near as strong as the gold bulls would hope that we are on such a weak market day. And again, the reason, in my opinion, is the strength of the dollar, where the dollar did pull back today, but it's still very strong. And in my opinion, like I said, if gold's going to really get going, and any of these precious metals are going to really get going, we need a weak dollar and a weak market at the same time. Silver bounces underway, 4-hour time frame. Need a trend change. It's coming straight off the low, but creating enough space to look for a 4-hour higher low when this move does top out. The bull miners have this triple bottom, essentially, the non-leveraged version without time decay. We broke support by 9 pennies. So that 9 pennies is not enough for me to say it's a clear bear break. I would call that a double bottom. So we saw a very significant bounce. We pulled back pretty hard as well. Have we changed the hourly trend? Not really convincingly. The bulls want to hold 26.89 and break 27.47 tomorrow for a convincing hourly trend change. And if we don't see that, honestly, to me, that's a red flag. If the bull miners can't change their hourly trend, and if the gold and silver bulls don't get significant follow through here on such a negative market reaction and weakness that we saw today, that's a short-term red flag for bull precious metals and miners. So NUGT had great opportunity. Once that news came out, ripped higher real hard, real fast, almost a 10% move. But again, no trend change on the hourly at this point after that move. Oil, 4-hour downtrend continues. New 4-hour lower high is 54.84. 4-hour lower high, lower low, anything under 54.84 keeps the bears in control. 53.03 is support, and the next support level after that is 52.82. Daily chart really struggling to get any kind of bounce going, and again, until we change that 4-hour trend, and look at how great a guide these exponential moving average resistances are. Bounce attempt, rejection, rejection, 3, 4, 5, 6, 7, 8 rejections, and so that's going to be in play again the next couple days, potentially for the inventory report. Actually, that's tomorrow. Inventory report tomorrow. Exponential resistance on the 4-hour time frame will be in play. Natural gas. Didn't get a setup I liked, looking for an oversold bounce, and we dropped down to a lower low. We're just seeing short-term little bounces to cool off RSI levels and allow for another leg down. So we're going to need to see an hourly trend change at a bare minimum for any kind of meaningful follow-through. And it's just the kind of move where the daily chart is getting extended enough that we're going to be looking for a bounce and for a lower high to form, but not there just yet. And until I see a setup that I like with good risk to reward clearly highlighted, I'm going to leave natural gas alone. And if I miss a bounce, that's no big deal. We can scout for a bearish entry on a daily lower high, anticipating anything under 2542 will just be a daily lower high. So all in all, the bears have control in the short term. QQQ short-term support will be key into tomorrow, and I would consider it a victory, a short-term victory for the bulls if QQQ can hold 185.75 tomorrow. And of course, the financial sector bears now have full control on any bounce. We're just looking for an hourly lower high, and we're going to be watching that hourly downtrend on the S&P 500 as well, because as long as we are setting hourly lower highs, we know the short-term momentum belongs to those bears. So that's where we stand. I appreciate you watching. No end of the video here today, as internet speed is brutally slow, and going to just keep it as short and sweet as possible. Thanks for tuning in. Do good things. See you tomorrow.